Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So we saw a pretty big sell-off yesterday. Markets down 2 to 3%. We were down 3 to 4% before a late day rally. Today, markets are looking higher. Now, we're not regaining everything we lost yesterday, but the key is we're regaining about half of it. And the culprit here is very simple. Yields are seeing a little bit of a pullback, which has been key, and the dollar is getting a little bit of a bounce. So remember, the markets have been very hypersensitive to the dollar collapse. So any bounce in the dollar is going to be looked at as a positive for risk assets. And then also yields have been going up even in spite of an economic picture that is souring. So any pullback on yields is going to be good for risk assets as well. All right, let's dive into the charts here. This is the S&P futures chart. We're looking at the intraday. This was yesterday's price action. Look at the drop in the first 2/3 of the day. Just an incredible nosedive, really one little bounce here in the lunch hour before continued selling. And then we got this little pseudo double bottom before a rally into the end of the day. And again, that was a tremendous rally on a technical basis. That was really, really important to the market maintaining a neutral to short-term bullish bias. I'm going to show you why in just a second. Yesterday after hours, and then we started to uptick overnight. Markets rallied up and then have kind of faded, but starting to push up just a little bit here again. So we are net positive. If we look at this, this is where we closed yesterday on the S&P futures, and this is where we are trading. So we are up pretty solidly, about 60 points on the S&P heading into the open today. All right, now let's flip over to the S&P daily chart, and I want to show you why yesterday's rally was so important. So in yesterday's game plan, I discussed how as long as we did not close below the low of this retrace candle, then the bullish bias would remain, meaning that this could still be an inside bar pattern of a bullish flag pattern off of this mega green candle or flagpole to the upside, right? So again, if we look at this, look at the low yesterday. Here was the low from that retrace candle. And if we drag it over there, we briefly pierced it. I don't know if you guys can see that, but just briefly we went below that line before rallying back to the upside. So again, very interesting right there that it held the bullish bias. And again, yesterday, if you remember, I drew basically a flagpole, a flag right here, right? So again, essentially you have the flag down here. So you have your retrace candle. So big green up. This is that huge candle 2 Wednesdays ago. Massive move to the upside. The next day we retraced, we bounced, and then we went into kind of this choppier period. That low on that retrace is what I am watching on a period of bullish or bearish, meaning that, again, any daily close below that level, that would be very problematic. Then I think we go right down to the double bottom down here, maybe even lower. As long as we hold on a daily closing basis above it, I would give a slight bullish bias to continued upside, with my upside target being right here on the SPY. Now, if we flip over to the QQQ, this is even more fascinating. Now, this is the stuff where conspiracies or just market dynamics can really shine. So in the candle, so here's your retrace low of the candle after that mega upside move. Now, into basically 3:30, we were trading, and we're talking 3:30 p.m. Eastern time, right? So we are talking literally with 30 minutes remaining in the trading day. The NASDAQ 100 was below that low from the retrace day. If we flip back to the charts here, what do we see? Well, let's go to the 10-minute chart. 10-minute chart, look at this, guys. Here's yesterday's action. We can get rid of the after hours action here. So let's go back. This is your yesterday's movement. Look at 3 o'clock, buyers came in, up, pause, and then 3:30, and this is that same line. So again, if I flip back to the daily, this is that low, and look at what happened. The final 10-minute candle got us back above that line, and therefore it maintains the bullish bias in the short term. And please understand, only short term. I'm still very bearish mid to long term on the markets, but short term, the chart is telling me to maintain that bullish bias. Isn't that amazing? So literally until the last 10 minutes of the day, in fact, this probably was the last 2 or 3 minutes, we were below the line that would have triggered a bearish signal on the NASDAQ, and we got back above, and lo and behold, look at where we closed on this. I mean, just remarkable, guys. By a hair, by a few pennies, we closed above that on the QQQ. Amazing stuff. All right, so in any case, I just like to show you guys these internal workings. And by the way, we closed above, and what's the market doing today? Well, here's your pre-market action. You can see we are net positive on the NASDAQ and the S&P today. All right, so let's talk some basics. What needs to happen for the stock market to go up? Well, ultimately, news-wise, we need to see some trade deals. I said this to you guys yesterday, is that we've heard a lot about, oh, we're talking to a bunch of countries. You know, it's always grandiose, like, oh, every country is begging us for a trade deal. But we don't have any facts yet, and the market needs facts. It needs official deals. So you need some of that to occur. All right. In addition, from a technical standpoint and from numbers, what we need, if we flip back to the charts, we need the 10-year yield to start going down again. All right. The market wants cheap money. To get cheap money on the 10-year, we need to know that other players are willing to buy our debt, U.S. debt. All right, the fact that we saw this big pop up, and I've gone over this many, many times, this should have been in reverse. Yields should have been dropping, but instead, a lot of countries said, you know what, we're not going to buy your debt. So therefore, when you have less buyers of debt, the U.S. government has to offer a higher interest rate. So again, this is one of the reasons why I say, hey, yeah, the Fed in normal conditions can affect interest rates, but if other countries just step back from buying our debt, then there's nothing the Fed can do about that unless they decide to buy all the U.S. debt, which, again, doesn't make sense in the long run. All right, so yields went up. We pulled back into support. We bounced the last 2 days. Look at the downside move. Just a little downside in the yields takes the foot off the throat of the markets and enables them to catch a bid. The dollar's been in free fall, one of the biggest Forex collapses on the US dollar in history in such a short period of time. But look at the dollar today. It is moving higher here, and that is helping also allay fears that the dollar again is in total collapse mode. The fact that we're getting a little pop. So this here, green on the dollar, red on the 10-year yield, those combine for the markets to be moving up in the pre-market. And again, here's the after hours or pre-market action on the Qs. This was your close on the Qs, and this is where we are trading. I know it seems very simplistic to talk about that, but it's actually not simplistic. It's very complex to understand how important the US dollar is. This is stuff that you're not really going to hear in the mainstream media, right? If you turn on CNBC or Bloomberg, they're probably talking about, oh, well, you had some earnings today and this and that. In essence, it doesn't really matter. And frankly, the earnings today, I'll go over them in just a minute, they didn't really do much. You know, yeah, sure, 3M is up a little bit, GE is up a little bit, but you're not up enough to really be creating. And plus, the markets were up overnight as much as essentially they are now without those earnings being reported, right? So again, that's important to take note of. All right, so let's go into the chart of, let's take a look here actually at some of these earnings. So just to go over here, here's 3M reporting earnings this morning that were better than expected. Revenue came in better than expected. So we are seeing a pop on 3M, but notice it closed yesterday at about 126. It's only trading at 132 and change. That's a $6 move. That's basically a small move here. We're not seeing a massive move up. In fact, if you just go back a couple days, back to Friday, or actually Thursday, since the markets were closed last Friday, we're basically back to where we were trading last Friday. That's about it. Now, the one issue that popped up with 3M is that they said that because of tariffs, their future earnings, so their guidance was light, their future earnings will be affected by 40 cents per share because of tariffs. That's what they're projecting out. So again, just something interesting on that note. Okay, other stocks reporting this morning. General GE Aerospace up a little bit on earnings. The daily chart had been hammered down a little bit. So again, we're just bouncing back up in this range. Notice how I haven't given you any trading levels on GE or 3M because the moves are not big enough, right? A good trader for day trading purposes, you need mega sized moves to get that counter trend movement, or you need a bull flag to form during the day on an up move that'll give you a buying opportunity later in the day. We're not getting any of that in these charts at this point. Verizon reported earnings. Verizon did okay, but again, the stock is selling off here. Now, why, when they beat on earnings, beat on revenue, why are they selling off on earnings? Just take a look at the daily chart. The daily chart has been one of the better performing charts in recent, months. And again, that means that people had expected a lot from them versus a lot of these other companies that have been beaten down. And so, yeah, they beat on revenue, beat on earnings, but they didn't beat by enough to warrant a continued up move. So you're seeing some profit taking in the pre-market. Now, listen, this is not a bad move down. So this can get my attention in terms of trading. Essentially yesterday we closed at, we closed around 43. We're trading at 40 and a half. On a $40 stock, that's not bad. I will be looking for a level, and this is an old trend line here we can actually get rid of. Don't need that. That's an old one. But really what I'm going to be looking at here, folks, is this pivot right down here at around 39.25. 39.25, and then there's a gap fill at 39 Pierce. This zone here will be the level I start to analyze for a day trade. So again, notice how percentage-wise this is, for Verizon, 7% drop or so, 8% drop. If we get down to 39, we're basically at a 10% drop. That would then get my attention for a tradable opportunity. RTX, which is the old Raytheon, is trading down on earnings. Again, this was a stock that was performing very well because of all the militarization that's been going on. This stock, again, is falling pre-market. It's closed yesterday at around 126. It's down almost $10. Not a bad move. Double bottom right here, 112-ish right there. That would be first level that I pay attention to as a day trade pivot low. And then if it continues down, you'd be looking at essentially 109 to this high right here at 108. And then obviously if it really gets slammed, 105 gap fill right there. Lockheed Martin reported earnings. This stock is fractionally positive in the pre-market, but not up enough to get my attention. And then lastly, Danaher, which again reported earnings, very thin pre-market action, but this stock is trading fractionally higher. Now, after the bell today, guys, this is where things get fun. After the bell, we get earnings from Tesla. Now, Tesla pre-market is trading up slightly on the day after a pretty nasty sell-off yesterday. This trend line has been hammered multiple times. If it dumps on earnings, I'm not buying it here. Instead, I have my new level, and I unveiled this yesterday. If this thing got a big slam down, this trend line around 170, 168, look at this, pivot low to pivot low to pivot low. And what's actually fascinating is you could go back and drag this all the way back to the COVID low. Look at that. Low, low, and low. So if we were to flush down to this level on earnings, let's say 170-ish, you better believe I'll be looking for a buying opportunity for a technical short-term bounce on Tesla. Other stocks to report after the bell, we have Enphase, Capital One, Intuitive Surgical, Baker Hughes, and Steel Dynamics. So again, really Tesla's the standout. Enphase tends to move a lot on earnings. So as a trader, I will be keeping an eye on that. You can see the stock is actually broken below this level. So what I'm going to be looking for is probably a move down to about 39. There's a level at 39. Again, it closed at 52 today, or pre-market, it's at 52 and change. So that would be a hefty drop, but about a 20% drop, which if it gets down to 39, becomes very, very interesting. All right, we're going to turn our attention to gold. Now, gold, I told you guys yesterday that when we were trading up near the highs yesterday, again, this was an early morning action. I basically tripled up my short position on gold. It was right at this level. Overnight, gold went higher, and now it's pulling back pretty dramatically. And if we zoom in, this is a potential topping tail. Now, it's not a topping tail yet. We need to see where it closes today. But if we were to close basically at 34.30 or below, which is not very far away, it's about $10 away to the downside, you will get a topping tail, which then is another factor for a potential top in gold. Now, again, We'll see how this plays out today. It was strong overnight, but some big sellers coming in the early morning here. Let's watch and see what happens throughout the course of the day on gold. Now, another factor that I want to show you guys, and this is fascinating. So we knew, I showed you guys this yesterday. You have two parallels, right? And that's how I arrived at this 3,400-ish area, give or take a little bit, as a potential major topping point on gold. So you have the high from 2011, and then the lows of that parallel go to the bear market lows just before the bull market move into 2020. And then a second parallel here that marks this top in 2020 to that same level. Now, again, we are slightly above it, so we'll have to see how it plays. But look at this chart. This is a great chart, folks. This is the inflation-adjusted price of gold. Now, first, we have to be realistic here. So, to be fair, even gold at currently 3,400 and change is still not at its all-time highs if you adjust it for inflation for the 1980 high. But look at how close it is to a double top. And in addition, you have this trend line here, which also we have now pierced and are pulling back from. And so suffice it to say, it's not just this chart with the two parallels, but then basically in this same vicinity up to about 35.50, 35.75, you have major resistance on the inflation adjusted chart of gold. And so again, just a couple other interesting things. But I think for a lot of you guys, one of the most fascinating is that, think about this. We think gold is at an all-time high, and on a price point, it is. But if you do inflation adjusted, gold is still not quite at an all-time high. And this is one of the reasons why, personally, I am still a believer that even though I'm short here for a pullback in gold, let's say over the next couple weeks, I am still a midterm to long-term bull on gold, considering we haven't even made an inflation-adjusted all-time high yet on gold. All right. So again, back to the charts. We'll get into a few other things here. Let's look at silver as long as we're getting into silver here. Let's take a look at that. Let's flip back to the daily chart. Silver, look at this, guys. It continues to hold steady right above this level. Could be putting in bullish consolidation above this trend line here. We'll keep an eye on that. But again, it's obviously lagging gold by a mile. There's no doubt about it, as is platinum and palladium. I still really do like palladium, by the way. And it pulled back the last couple days after a couple big moves to the upside. But nonetheless, again, maybe bullish consolidation could be telling us there's a move on silver coming to the upside. Next up, let's take a look at oil today. Oil is inching back up a little bit. Remember, this is a basic bearish pattern. You have your flagpole here and then your consolidation. I'm still in the camp that there's still a chance that we rally into this level here before that next move to the downside. It may not, but suffice it to say, I'm not willing to take a short on oil until we get into that level, and I'm totally fine with missing a trade. I've missed a million trades in my life. I'll miss a million more. It's not about the trades that you miss. It's about the few that you get and get paid out on. Natural gas confirmed a breakdown yesterday. So we got below this trend line, but didn't confirm. Yesterday, you obviously confirmed it. What that tells me is that probabilities remain. Even if you bounce up and hit this line, eventually we have a high probability of going to this level. That will be support. And I may, and I say may because I haven't made a decision yet, but I may be a buyer of nat gas on this front here at around 297. But I got to see the price action into that level to decide if it's worth a buy. All right. So, guys, I mean, listen, this is interesting action. I think, again, we all have to be fully aware at some point. You've got to assume some trade deals will get announced. Negotiations probably are ongoing. The market wants the meat and potatoes. They want facts. They want deals with major countries. We want to hear that there's negotiations actively with China. Those are all things that could propel us up to those targets as long as the S&P and the NASDAQ hold those key lows that I went over earlier in the game plan today. So watch that level on a technical basis. That's going to be the defining factor between whether I am near-term bullish or bearish. Right now, I continue to be near-term bullish. Aside from that, watch gold. Does it form a topping tail today? That's something that we want to pay close attention. And then don't forget, we have earnings today after the bell from Tesla. Later this week, we have Alphabet and Intel and a bunch of other big tech names that will also shape the market. All right, you guys are awesome. Thanks so much for tuning in, guys. You guys are rock stars. I appreciate the support we all do here at Verified Investing, and I'll talk to you soon. Take care.